So I want to cover Infinity Scalper today, two currency pairs, the euro and the pound against the US dollar. And today we had a news release. We had unemployment claims at 8:30, as you can see right here. Uh, Good number, not as good as they were forecasting, but still better than a negative number. So the general rule is you want to not trade right when the release is released. You don't want to do that. Stand aside. Depending on the release. Now, some releases are more market moving, especially interest rates. So for something like employment claims, take 5 minutes before, 5 minutes after. All right, or just watch how the market's trading. You can also do that. So let's cover the pound US today, and we'll also look at the euro US. So we're going to the pound US here, and you see this white line up here. Now you want to obviously have profit targets, and I've talked about it before where you've got a couple of different ways you can do this. You can look at this thing here is called an optimal exit. That's that yellow line right there. So if you're in the short trade, short obviously, you would get out when you see this. Now this is before our time for the US session. I'm not sure what time it is for London, but you want to trade the first 2 to 3 hours, and that's about it. Call it a day. So this would actually be, it's around 5 o'clock. So you could actually be in this trade if you're trading London, but let's just keep this focused on the US session. So you can get out here, or you can look at more structural exits. So if you look over here on the, just scrunch in a little bit, you can see that, yeah, here we go. You can see the market came down, bounced around. It basically respected this zone for quite a while, finally broke through this momentum candle, which usually happens, retest, and then you put in a higher high from this one here, from this high here. This is a lower high than this, right? And if you think back to what we know about, common trend structure, for downtrends, we want lower highs and lower lows. So we get our lower low here, we get our lower high, lower low, higher high. Now, once you start getting this, you're looking at a market that can be considered in consolidation when it starts breaking this pattern until it resolves itself. All right. So looking at this zone in general, it's a good idea that this would be a place you'd want to get out at. You can even see over here, it's kind of scrunched up, but price had rocketed up, consolidated, and pushed higher here. So not a bad little zone, right? Like it's a zone, not an exact price point. So if we look over and we look at what our entry is here. Now these candles here, this candle here is 11:25. Okay, right now it's 11:28 my time. So what happens is this candle forms at 11:25. Okay, so let's go over here. Here's 8:35. So we've already had the news release on this candle here. The news release has already happened, right? So our entry candle is actually perfect, set up right here at 8:35. And the entry is at the close, or if you're more conservative, even though we are in the conservative setting over here, you may decide, you know what, I'm going to wait until it clears the high, whatever you want to do. But just to keep this all basic and everything the same, I'm just going to take out the highs. The close, sorry. So this is the close on that one right here at 29.52. All right. So we're in a current buy, as you can see here, which is true. Next candle opens up in, 36 seconds, 35 seconds. And it's 11:29 my time now. All right, so if you look at this, price comes up to this zone here. It doesn't quite get to it, right? But it's in the zone. So you might be in this trade, trade it all the way up. You might have got out here and said, oh, look, we spiked up pretty close to it, right? We're only, not too far away from it at all, right? So you might say, okay, well, this is a pretty strong rejection. Once you start seeing this, you might decide, okay, well, I'll get out here. And that would have given you 22 pips. But if you're thinking, okay, well, let me take a look here. Let me just do this. Now I can't copy and paste here. So let's just connect these highs. There we go. You see, this is not a bad way to get out, right? What do we have here? We've got an exhaustion move here, right? It's broken above this trend line here, broken above, as it did this one as well. So it depends on how you are going to manage your trades. Is depends on what your profit target's going to be. And up here, it could be 35 pips, or maybe you're just trailing it. You can also do that. You can trail stop, right? Price moves up, consolidates, breaks above, move your stop into here. This happens, right? We start consolidating, got all these inside candles inside this big one. So you may decide, okay, well, let's see what happens here. We're in this range here. If it breaks out to the downside, I'll take my profits. If it breaks up to the upside, I'll just lock in more profit. So you can do that as well. Now your stop would be up in this area right here. And you can keep on trading that way as well, as opposed to just getting out knee-jerk reaction. A lot of traders do that, and what happens is they take bigger losses than their wins, and they eventually lose their trading account. And as you can see, we don't have an optimal exit, and you might just wait until the trade turns over. And if that's the case, right now you'd be up 35 pips. Trading one standard lot at $10 a pip, that's $350. Not bad, right? Let's take a look at the euro. And here's the euro. And as you can see, we moved up, 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 up. This is absolutely a pivot area right here, right? You can't question that. That's exactly what it is. You see the price moved up, retest, retest. It's probably a few in there. So 3 or 4 tops up here. And price collapses, all right? Would that make a good profit target? Sure it would, right? The zone would be awesome. So you would wait for that, right? Maybe you don't go right to the top, right? Even though the trade does get that far. Maybe you, well, where is it? I can't find it. Here it is. Maybe you look at this and say, okay, you know what? As long as price gets up into this area here, right? Around this area right here, then I'll get out. Let's see what happened. And this is where we talked about in an earlier video about getting in sync with the trade. And that can happen when we get these big moves. And obviously, if this big move happens, after the news, drop down to a 1-minute chart. And maybe I'll take a quick look at that. So here's 835. This is the candle, right? Big thrusting candle. Now, here's the thing. If you're using a moving average as a trend determinator, right, which you want to follow the trend, you see it kind of curve up over in this candle in this area right around here, all right? Using basic technical analysis, we have a downtrend line, price breaks above at 835, right? The news release is right here. News release, right? You can enter here, or like I said in a previous video, if the trade is still valid, look to get in on a retest if we haven't changed to a downtrend trade. There we go. That's what I want to say. What you do on this spike down right here, you can get involved there. But this trade's still valid, breaking the trend line. Like I said, using just basic technical analysis, this will give you your entry and your exits, right? A lot of traders have a problem with that. And if you do a Google search, right, a lot of people are looking for setups, okay? They're looking for their entry price. A lot of traders don't have an entry price. They don't know how to get into the market. This would help. This is actually just a plain old trendline break trade, right? Breaks above, retest, back up to the upside. Let's get back to our topic here. So 835, right? So news has already happened, right? We see the reaction. So let's say we get in on the price, right? There's no reason why we couldn't, but just to do it, let's get in here. All right, you can see that the price rockets to our zone, 54 pips, one standard lot, $540. Obviously, risk management is vital. You don't be trading a standard lot if you got a $50 account. It's just not going to happen. And you also have the optimal exit here. And this actually is not a bad little optimal exit. You can see we just kind of rejected it. We don't know all this is going to happen after. We have no idea, right? So this would get you out for about 32 pips, right? Oh, wrong one. Same difference, 32, 34 pips. You wait for structure. Maybe you'll get out here. But then you'll see this happen, right? You got the one top. Oops, sorry. 1, 2, 3, triple top, right? But look what we're forming. Again, if you understand just basic technical analysis, the basic chart patterns, look what we have. Here's our top. You see we're going up like this, pushing the break up to the upside. Maybe you're just waiting for this to happen, right? This could happen as well. And you just keep trailing your stop up. How you trade it, it's up to you, right? maybe under each consolidation. So maybe your stop is here, it breaks above, now your stop is here, it keeps going up. Now we're in this consolidation, now your stop is down here. However you trade it, you just got to be consistent, right? And let's just say, you got out here. You saw the consolidation, it was time to back out. It's 11 o'clock, time to quit, right? That's 115 pips. That'd be $1,000 a day on a standard lot, one. Most people don't have that much money, right, in retail Forex. They don't, because it's so easy to get involved in Forex on the cheap. So maybe you're only trading, dollars. That's fine too, right? You got to start somewhere. Your goal should be account growth, not making an income when you've got such a small account. But that's just two simple trades. I wanted to show you how in this turn on the Euro US, if you didn't get this because you thought, oh no, it's too close to news, I'm following my rules, this hasn't really turned up yet till over here, you can get it on this retest right here on that green candle that spikes down. I've talked about this before. Or a basic trend line break to the upside. It can be, you could tell you that, okay, now we're starting to move higher, right? Even though I'm not going to get into it. Well, I'll get into it quickly. Trend line breaks are great. However, you want to make sure that if you're getting involved in a trend line break such as this, and this is with any strategy, look over here. A lot of times what will happen is this will break and then it will get held up here and then reject. Okay, so as a trader, and if you think about it, it kind of happens here, right? We don't know what this is actually testing, where this is seeking order flow on this candle here, right? All we do know is that it broke this trend line. That's one thing. Broke up. Breakout traders get involved, pulls back, takes them out, goes back to the upside, right? That's how the markets work. So that's that. If you want to pick up Infinity Scalper, click my link over here to the right, or click below in the description box, and enjoy the rest of the Infinity Scalper videos. I think it's a great strategy. It's going to give you what a lot of traders want, and that is the entries and the exits. It's going to teach you a little bit about trade management. But if you understand anything about technical analysis, you can do a little bit of it yourself. But the bottom line is a lot of traders look for setups, right? There's that one website out there called Trading Naked, tradingnaked.com, yeah. And that was just, or Naked Trading, I don't know. And all that was setups, because that's what traders are looking for. Well, Infinity Scalper is going to give you your setups. How you trade them is entirely up to you. Thanks for watching.